Hello and welcome. Um, Today we want to talk about something, and the question is it possible to own a home in Kenya? Not only in Kenya, I think owning a home is one of the greatest achievements that people make, especially because of the very high costs of purchasing homes or constructing. And so today I want us to ask ourselves about okay, here we do very basic financial literacy, and today we want to talk about mortgages. And the question is, I'll basically be answering three questions: what a mortgage is, what you need to get a mortgage, and where you can get mortgages. Okay, also I want to also mention several types of mortgages that you can have. And basically, for many years I thought that a mortgage is a house, even though tulielewa, even though tumezoea kusikia, but a mortgage is a loan that is that someone takes up to buy either a property, and that property can be a built house, or a house you want to construct, or actually land. And what qualifies it to be a mortgage is the term of the loan, because they usually loans for a longer period of time, usually to a maximum of 25 years. And why is it so? Because the repayments ought to be manageable, because usually owning a home is an expensive venture. So those loans are usually structured in such a way that you pay for a longer period of time. I want to say also that mortgages can be given by housing finance, organizations or banks. Actually, lately, circles are also giving housing finance option, and also microfinances. So the ranges of where to get a mortgage is really broadening, but typically it's the banks and the housing finance organizations that were giving mortgages. So that understood, I want to be with you together that a mortgage sio kununua nyumba. Mortgage can be a loan for buying a plot, and it also can be a loan for constructing a house, and it also can be a loan for buying an already made house. So while we are at that, why I chose to talk about mortgages is because many people don't know that there is a way to get a house without because Wakenya hatupendi madeni. So many people will want to save, buy a cement, which is also another approach. But for those of us who would want to explore mortgage option, these are the basic things that you need to do. So the types of mortgage, I would say I've actually just mentioned them, that you can do a mortgage and buy an already made house, and you can do a mortgage to buy a house for renting out, like for a business purpose. Like people who buy a house and you look at the market and you're sure that you can be able to rent that house out and be able to pay your mortgage. You can also get a mortgage for construction or get a mortgage for just purchase of land. That said, as I said earlier on this channel, is that I've worked for the banking sector for quite a while. And one of the statements that is repeated as you sit at that desk giving loans is that nilinyimwa loan. So who actually qualifies for a loan? And this is something I want to do another video about, the criteria of borrowing or the criteria of lending, so that as you walk into a bank, you can be able to answer those questions beforehand. And the question is, who qualifies for a mortgage? What are the requirements for you to get a mortgage facility? Number one, very important, is you must be having the ability to pay. The ability to pay is proved in these two ways, basically. This is very basic information that you might produce a payslip. That is one way. Maybe 3 months payslip to your bank. They look at it, they look at how much you earn, the obligations, and then they tell you whether you actually qualify for that product or not. Number two is that you could be in business, and how banks or lenders check your ability to pay is looking at your financial statements. How much comes into your account? And they may ask you several other questions, including what are your obligations with other banks. And good enough that right now we have the CRB, the Credit Reference Bureau, so they are able to check, are you actually, based on the other loans that you're paying, able to pay for that mortgage. So once that is done, so I would advise that you don't go all the way to shop for a house or a property without actually knowing how much you qualify for. So you can walk into a banking organization. I'll mention a few towards the end of the ones who are giving mortgage facilities. Walk into an organization, ask them, with these payslips, with this income, how much can I get? Then from there you can go into the market and check for a product, for a property, that fits your qualifications. That's it. The process of getting a mortgage in this country is long, and the period is yani urefu wa hiyo period ya getting a mortgage facility is usually not on the whether you qualify, the qualifying, but usually is on the legal process, because there are a lot of transactions to be done with the Ministry of Land, the transfer, the registration of a charge. That is what takes time. And so I would give it an average of 3 months if the process is very smooth, and a maximum of 6 months if the process is a little bit slower. So the market rates, interest rates vary depending on the organization you go to, and so you may need to do a proper shopping to decide on where to take your mortgage facility from. But begin from your bank. It's always easier to borrow from someone you have an existing relationship with rather than someone who is new to you. I would also want to say that for employed, the lenders will prefer people with a longer, what do I call it? You know, there are contracts and there are people who are permanently employed. So organizations basically prefer, because of the period of the loan, they prefer those who have more a permanent and pensionable kind of arrangement. But explore, you don't, because if you can prove the ability to pay, even if you're in a contract sort of arrangement, then they'll still be able to give it to you. I want to mention at this point, at the end I will give a very necessary tip on mortgages. At that point, I just want to mention a few organizations in Kenya that give mortgages. And number one is Housing Finance Group, Standard Chartered Bank, Citibank, Cooperative Bank, Commercial Bank of Africa, KCB, no, CBA, and right now they merged with NIC, CFC, Barclays, and Consolidated Bank. Having mentioned the organizations and the banks that are giving mortgage facility, a quick one. I seem to have missed this. I should have said much earlier in the video, but that when you're being given a mortgage, a percentage of the money, that the cost of the property must be your contribution, usually around 20%. Nipeana example. If possibly you're buying a house that is worth 5 million, For example, the bank may need you, or the lender may need you to contribute 20%. 20% ya 5 million ni a million. So that needs to be deposited before the organization that is lending pays the seller for the rest of the amount. So the things that you need to look at is, are you able to contribute the contribution that is being required? So once when you're asking, ask them, what is my contribution? Because basically property purchase needs you to have a level of contribution so that you can have an interest. Ndio ulipe loan yao, ndio usikatae kulipa pesa yao. So ask what is the percentage of your contribution, and you need to have actually figured how you get that money. The other factor I had already said, that you need to prove that you have an income that can cater for that those repayments. And finally, there are fees that come with mortgage facility. Some of them are lawyers' fees, valuation fees, stamp duty. So you need to approximate how much that would be and be sure that you are able to pay. Finally, the cost of mortgage. When you take a mortgage, you're getting out of rent, because every time you pay for your mortgage, you are getting a percentage ownership of the property. That said, you could be paying a mortgage, and the repayments are usually very reasonable because of the period being very long. But be wary of being relaxed and paying the mortgage in the full repayment period. Why am I saying that? When you look at the interest that you have paid over 25 years, it's usually very, very high. But from the statistics in this country, Kenyans don't love debt. And so what happens, people are able to repay their mortgages, even mortgages of 25 years, in 7 years. Actually, statistics show that many mortgage takers are able to pay within 7.5 years. And that is very brilliant, because every time you get a lump sum, like 500,000, 100,000, and you take it to your bank, you offset the principal amount. So it's an option you can explore, but be very proactive in paying. Usirelax, useme, now that this mortgage, the repayment is 30,000, then this is what I'll pay throughout the 25 years, because it might weigh you down, because factors change. As you grow older, you may want to do other things. So the earlier you are able to offset a mortgage facility, the better for you, the cheaper it will be, and so you'll have achieved your goals earlier in life and in a better way. I wish you all the best as you explore this option, and the Lord's blessing. My belief is that if God guides your step, everything works out well. And so as you consider it, shop around and see if this is one of the options that would make you get a home earlier than you'd ordinarily have gotten your home if you are to save up and build a home. For today, bye bye.